Hey, good afternoon, everyone. Thanks for coming in. I really appreciate you giving me your time. This is Mark from Right Line Trading. We just closed out a stellar week. We made really great money trading uh, uh, trading crude, gold, the E-mini, and the NASDAQ. We had trades on all four markets, and we just did. Honestly, we did stellar. And what I wanted to show you today was our swing trading platform, which we just finished after a long period of time optimizing it. And I think you're really going to be impressed. Now, before I start, then I want you to know I'm not going to do this off of any slides. That's really the way most of these webinars are presented. Most of the slides are junk. And I don't want you to have to listen to a lot of my background and a lot of what your goals are. I know that your goals are to make money. And I know that you want to take trades that have low risk and potential high reward. I know that you want to become a professional, profitable day trader. And I don't have to couch that in 100 different slides and asking you what your goals are. I know what they are. They're everybody's goals. And one thing that I never do is offer you a piece of software that I don't think will help you get there. Now, I want to start off with this disclaimer, is that all signals and trading opportunities provided both orally written or electronically to disclose to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures or forex markets, nor any profits or losses that may be incurred. Participating in trading in the futures and forex markets involves and stocks involves a substantial amount of risk. It should be understood that a person can lose a substantial amount of money, so be careful. And trading is not appropriate for everyone. Do your own due diligence, consult a financial advisor, and just understand that right now none of us here are licensed commodity trading advisors. Now, with that said, I'm just going to drop the slides completely. We'll come back to them later. I'm going to move them off the slide and I'm going to move on the swing trading platform. And I'm going to do a little bit of an explanation for those of you that have not seen it before. And I'm also going to show you our trade analyzer, market scanner, really, to tell you to look and see that you can monitor an unlimited number of futures, forex, or stocks here, and it's going to give you a buy or sell, so you do not have to worry about monitoring a ton of different instruments. Now we've added a new indicator since the last time I gave a presentation, and unless you're in the live trading room, you may not have seen it before. And it's really pushed up our win percentage significantly. And what I'm going to do is I'll use this move right here on crude as an example. And then we can go through multiple instruments, if you like, multiple, stocks, futures, or forex. This is our fixed Uni-Renko configuration. And I strongly recommend that you do not trade time, tick, or range. We've tried all of them, and the one that gives us the best signals and gives us the biggest winners are this particular Uni-Renko setting and this configuration. Now, I haven't cherry-picked this area. I'm going to show it to you, and you're going to see that I'm going to show you multiple instruments. And what I do want to go over is what you're looking at, because some of you may not really understand what you're looking at. I think many of you do, but some don't. Now, the most important independent variable on the chart, now the market analyzer, let me see, I don't think we have an always on top. Yeah, we do have an always on top, so it's not going to get pushed back. The most important independent variable on the chart is the multi-time frame alignment and trend. It's right here. If I can find the drawing tools. hang on, they're probably right under here. And this is when you're going to get your best trades, when you get this pink area. And what's important to note is that this pink is not created by any price movement on the chart. It is created, it's an independent variable, and therefore it independently predicts the direction of price by looking at the higher two time frames. Now, if the higher two time frames align to the downside, price on your trading chart is almost always going to fall. So this background bias is extremely important. And if we go through the chart, you can see the green is pushing price up. And the pink is always going to push price down. And the important thing to note is that price falling is not creating this pink background. The pink background is created independently by the higher time frames. That's the disconnect between this platform and 99% of all the other software that you see. We do not use price on our trading chart as part of the information that goes into our indicator analysis. All the analysis is created by looking at the higher time frames or at differing markets. Now, there are three different background colors, and I'm not going to, in this webinar, I don't think it's really practical to go into the power of all three. Whether it's dark pink, light pink, or bisque, those are three down bias. That's where your bias to trade is short. You have some form of alignment to the downside, and the only direction that you can trade is short. When you have cyan, blue, or optimally dark green, that's when your bias to trade is long, because the higher time frames are aligned to the upside. Now, if you come aboard, we're going to spend an enormous amount of time on this, and I'm going to go over this ad nauseum in the live trading room. So don't be concerned about that. Now, when the background is clear, that's when we don't trade, because there's no multi-time frame alignment and trend, and that is when price is most likely to chop. And in crude, there just aren't that many. Right here is a good area where it's clear, and we're not going to trade during this time period. Remember that the precision with which you trade, the ability to get winners, is based on this formula. And I do want to put it up, even though I know that some of you have seen it before, but it's really the key to becoming a successful trader. No, I can't spell. It's sensitivity. And just the way this thing is, over specificity. I'm just going to move it up. And it's such an important concept that I want to take the time to type it out. Times prevalence. Now, this is a mathematical axiom that should underline everything you do as a trader. And that equals, I can't find an equal sign here, but it's probably here. Just put the text. If I knew how to work this better, I could probably just type it all out. And this is going to equal your win percentage. And I want to explain to you what this means, because it's really important to underline your trading philosophy and your trading methodology. And It can be described as precision, but for our purposes, the best thing to do is to call it the win percentage. Now, if your goal is to get every winner, you're going to trade with sensitivity. And if you get every single winner, if you define a winner as a 30 tick or 30 pip or 30-cent move, and every trade you take goes that distance, you'll trade with 100% sensitivity. If your goal is to avoid every loser and you take no trade that goes 29 pips, ticks, or cents, thereby avoiding every loser, you trade with 100% specificity. And your win percentage is going to be 100%. Prevalence doesn't play a role anymore. But our predisposition must always be to trade with tremendous specificity. And that is our goal as traders, is not to get winners, i.e. trade with a lot of sensitivity. Our goal is to trade with a lot of specificity and avoid losers. If you avoid losers in the course of a week, you only pull in a couple of losers. It doesn't take many winners to make you a ton of money. Now, where does prevalence come into it? Is where is the most likely place on the chart, or the most prevalent place you are to get a winner. And the most prevalent place is where there's a multi-time frame alignment in trend. And that is when there's green background. So if you trade the green background, your prevalence of getting a winner is going to be the highest. If you trade with a lot of specificity, so that you need everything that you want to align on the chart, you're going to avoid a lot of losers. Now, some winners are going to get past you, and some winners get past us all the time when we trade this live in the room in the morning. But we never care, because we know we're going to get great trades that set up with exceedingly low risk on green background. And I'm becoming a green background addict. I want that multi-time frame alignment. I don't have to have it 100% of the time, but I want it 95% of the time. So that's independent variable number one that we want to use to take a trade. Now, this is just a 50-period exponential. This is a unique line. I'm not going to spend a lot of time on it, but it's a 15 exponential of a 15 exponential. It moves differently than any other line you will find on any other chart. And it's configured because my background is in mathematical modeling. And that's the exponential that I've modeled in order to create for us the best area of support and resistance that I believe to trade in the markets, independent of whether we trade time tick, range, or Renko. It's an exponential of an exponential. Now, here is the line that's new, and the line that has really created an enormous amount of winners for us and really, really reduced risk. And it's a very, very unique line, and also a line you're never going to see anywhere. Now, you'll notice I haven't gone below the chart yet. Let's just look at what is operational on the candle bodies on our chart as we watch it trace out. This line is a combination of two things. Now, it's the only indicator that I created 8 years ago that's still on the chart. We've modified and rotated everything else, but it's a 15 period, but this has stayed, plus an ADR ADX component. So it's not only measuring support and resistance, it's measuring volatility. Now, the market always goes from an area of low volatility, where this line is yellow, to an area of high volatility, where it shoots up hard green, and then goes back to an area of low volatility. And that's really what the market does ad infinitum. It's like a coil: low volatility, high volatility, low volatility, high volatility. Look at this move down on crude. It comes off an area of low volatility. So that's what we look for to take a trade. We look for a period of low volatility and then a move up on in a high volatility environment where the market's really gonna have legs. And when the candle bodies, because it's also a moving average, and when the candle bodies are tight to it, I mean, I hate to say it's a trade you're going to take to the bank, but it is exceedingly low risk. Now, before I continue, I just want to give you an idea of, if you entered here, and this is an entry, and I'll explain later why it is right here, because background goes green and a bunch of other things happen. This is crude. If you took this trade long here, maximum excursion on this trade, and I'm not going to say you're going to get the full move, is 174 ticks. You traded this with one contract. You made $1,740. Now, everyone's going to get in at the same price, but some traders are not going to get out at the same price. I'm going to give you my recommendation for exit, but based on your automatic trade management strategy, you're obviously not going to get out at the very top. But I just want to give you an idea of the magnitude of the size of this trade, and the duration in time of this trade is the whole day. Now, this day was September 4th, and you would start the trade at 7:47 in the morning, and it would reach its peak at 13:23, which is 1:23 in the afternoon. And you would not be taken out on this entire move. And this is just a stellar move with no reason to exit. So if you want to get a 174 pip tick or cent move, the system is going to give them to you. Now, what we also need in order to take a low risk trade is we need to assess money flow. And what we have here in line number 1 is, we call it our quant line. And quant line is a very, very powerful assessment of money flow. It usually occurs when there's a multi-time frame alignment in trend. Sometimes, though, it doesn't, because it's green here. And there is no multi-time frame alignment. But you see that the price is rising anyway. So when this is green, it means that money is flowing into crude. And why is it flowing into crude? No piece of software can directly assess money flow. I know that there are a lot out there that represent that they can, but that you really can't. There's no indicator that can tell you when money is flowing into the market. You see it in its proxies: buying pressure, selling pressure, price moving to the upside. If you're getting buying pressure in the market and there's money inflowing into the markets. But these are all proxies for money flow. What these consist of are 3 correlative markets. And these markets are either going to rise when crude rises or fall when crude rises. Now, it's taken us so long to find out what these markets are that I don't reveal. And it's the only part of the software that I do not give out. Now, when we look at the NASDAQ, the correlative markets are easy. They're the Dow, the Russell, and the E-mini. I mean, we want to take a long trade on the NASDAQ when the Dow, the Russell, and the E-mini are also going up. If you do that, I mean, the big money has risk on and they're buying stocks across the board. If they're not, and this quant line is not green, the likelihood of getting a winner is less. So that's independent variable number 2. And you'll notice it has nothing to do with price movement on our chart. It's almost always going to push price up, but we just don't know where it's going to occur, and we may get a green quant line in a place where we can't trade crude. And right here, we can't trade it. We can only trade crude. We can only trade any instrument long when the trend is above the 50 in green, the 50 is trending up in green, and the trend line and the 15 have crossed the 50 to the upside. Can't take a long trade below the 50. So this is price movement that we just can't touch. We're going to watch it, but we can't trade it. Now, the second independent predictor, or the third actually, is we want to make an assessment of momentum. It's very, very important. Whoops, I knew I was going to do that. Hold on a second. Let me just open this up. Okay, that's the modified signal B. And what I did was I just squished these two together. Let me drag them down. And hopefully we've got it back. Let me see if I did it right here. I can just reload it. If I reload the template, I'm going to lose the hang on one second, I'll get it. No, this is the, and I'm gonna have to reformat this. Give me 1 second, it'll take me 2 seconds. The MTF goes in number 3. And the quant goes in number 2. And I think that should fix it. Every time I try to drag it like that, I always do this. The quant goes in 2. And signal B goes in 3. You can drag these if you're really good, but I'm not so good. And the gear itself goes in 4. I only put, no, I'm just about there. Let me put that, it's in there. Okay, so let me just hit okay, and we should be good. No, we're not good because we're missing a line. Hang on 1 second. Oh, man. Now that is the MTF. The only thing I'm missing here, and here is the quant. I'm missing signal B. I'm sorry, hang on 1 sec. Oh my gosh. Where's my signal B? I'm sorry, excuse me for this. My signal B should be in 1, 2, 3, it should be in 4. All right, I've got it in the wrong one. It's in 4 now, and the gear should be in 5. And hopefully we've got it now. Now, I just have to do it one more time and put the gear in 5. This is what happens when you don't use slides. And things like this can switch. And hopefully this will fix it. We're good to go. Yay, here we are. So I'm just going to bring this down. Bring this down. And we're right back where we were. Now, it's really nice on, you can just change the thickness and change the thickness here. All right, well, we'll just sit with it right here. Now, the second line here, this line, is the multi-time frame assessment of momentum. Now, momentum is a really, really important parameter. And this multi-time frame assessment of momentum is based on the Laguerre oscillator. Now, you can see the Laguerre off the trading chart at the bottom. But this line does not look at the Laguerre of the trading chart. It's looking at the two higher time frames. Now, I just want to talk really briefly about what momentum is. Momentum is a measure of acceleration of price movement. If price is moving, I give this example each time I discuss Laguerre. If a car is moving around a racetrack at 100 miles an hour, constant, its momentum is flat. It's got no momentum to the upside and no momentum to the downside. If it then begins to accelerate, momentum begins to rise. If it begins to decelerate, momentum begins to fall. And that is exactly what the Laguerre oscillator measures. It measures momentum. And I want to show you the way it does. What it does is, it's always important for you to understand what the analysis you're looking at is. Here's the high of a move. And here's the close of a move. As the close approaches the high of the candle, momentum is rising. And as the close begins to recede off the high of a candle, momentum is falling. On a short trade, here's the close. And here is the low of the move. Let me get this way. As the low of the move approaches, as the close of the move approaches the low of the move, you've got acceleration of price to the downside. So you want price to approach the low of the candle body. On a long, you want price close to approach the high. And as it continues to do so, you're getting price accelerating to the upside or accelerating to the downside. This red line right here is telling you that on the two higher time frames, price is not just moving to the downside, it's accelerating to the downside. Here, price is accelerating to the upside. Now, the reason that we use the Laguerre is we've modified it considerably inside it to make it a kind of indicator. Now, it will show divergence, but we do not look for divergence. We want the Laguerre to show us momentum in a trade. Divergence does not work anymore because institutional money runs the market. And what we want to do is we want to be in on an institutionally driven trade. And if you look at a regular stochastic oscillator, RSI, Williams percent K, they're not looking for that. What they're looking for is divergence. We avoid divergence like the plague because more than half the time it's going to fail. And when you can't make a risk assessment of an entry, then you should never take that entry. So we have to have the correlative markets showing that money is flowing out of the instrument. We have to have a multi-time frame alignment of that instrument to the downside. We have to have the price accelerating to the downside on our higher time frames. Now, on the orange, the Laguerre line is heading down. When it gets red, it locks down. So it doesn't matter whether it's orange or whether it's red. Price is accelerating to the downside. Here, it kind of lifts off the 20 line for a little bit, comes right back down and locks. Here is where it's starting to get choppy. And here it locks long. As the quant line or the money flow line locks long, but we can't take this trade long. Now, this is the only indicator in which we use, which is important to trade off of our chart. And that is, we need to have momentum on our chart with our longer term time frames. Now, the Laguerre on our chart is almost always going to move into the direction of the longer term time frames. You see right here, the longer term time frame turns green. The higher time frames now are accelerating to the upside. What happens to Laguerre on the trading chart? It starts heading up and it locks long. As long as you have all three lines green, you're set to roll. Now, you may get blips in between, but once you're signaled into a trade, that does not matter in terms of exiting. If you look, the chart Laguerre is plastered to the 100 line. And it only comes off the 100 line right at the close of this down candle, actually this candle, which can be used as an exit signal. There are a lot of different ways to exit a trade. There's only one perfect way to enter a trade. Now, if you use this, these are really easy rules to follow. Now, on the right edge of the chart, I don't have, which I don't think I'm going to have an opportunity to show. I hope I do. Let me see if I can. You see, our hybrid candles form wicks. Only we don't store the wicks, the wick data. If we did, it would take up a lot of system resources. So if you refresh the chart or you close the chart and reopen it, the wick is going to leave. It's only present as long as you keep the chart open. Because what you want to do is you want to enter on a pullback into a long trade or a pull up into a short trade. And as far as I know, we are the only software pack. This is the only one that shows you the wicks inside the candles, which I want you to understand. These candles are just illusions. Real price is displayed by the wick. Now, there's a couple of other things that I want to talk about. One is the fact that without the wicks, an oscillator will not work. Now, I see $15,000, $16,000, and $17,000 packages that have an oscillator component, and they trade Renko bricks, and there's no wick. And those oscillators do not work. They're simply, their percent K line, which is what you're looking at, simply is just tracing out price. It's broken, but they don't understand the formula. The formula for the oscillator requires an open, high, low close on every candle. And on the right edge, where you're getting the wick, there's an open, high, low close. That's the only reason our Laguerre oscillator works and provides you with an accurate percent K line. Now, the other thing is the pivots. And the pivots are unique and very important in trading. The pivot comes off the candle body, not off the wick. If you create the area of resistance here at the wick, you're making a massive mistake. The sellers are here. And if you see price come up to it, and I broke it there, but if you see these wicks, now that I show them, they're all going to get broken. But When price comes up to challenge a wick, to challenge a pivot, we never trade into a pivot. It's very dangerous to trade into an unbroken pivot, except under a few circumstances that I'll go into. And I'm not going to go into all the details and nuance in this webinar. I just want to give you a real nice overview of the software and give you a feel for its precision, your ability to get winners and avoid losers. And there are some opportunities where you can trade into a pivot, but most of the time we want to take a trade that's free and clear, like this. And also a wick, I keep saying a wick, a pivot is only broken. See, price comes down right here. Here's a good example. It comes down, it bounces. It comes down and it bounces. Now this is on a long time frame scale, but it respects the fact that there are buyers here. And if you take a trade right here, there's a very good likelihood the buyers are going to walk in and blow your trade right up. And it would happen twice. So we don't trade into these. And it takes a 2/3 candle body to close below a pivot or above a pivot to take a pivot out. Until that pivot's gone, we respect it. And let's see if it's hit again to the downside. It may not be, at least for a long time. Here it is. It finally gets broken here. And it's only broken on this candle, where 2/3 of the candle body closes below. All the other pivots that I've ever seen are lazy, because it's a lot easier to trace your pivot at the wick and not at the candle body. And you can see right here, you have the same thing. Price goes up, it's turned it back. Price goes up, no 2/3 candle close. The wick's irrelevant, comes back. Finally, on the third try, you break it right here. And you actually have a trade here. And although this may seem like a small trade, it's not. I'm trying to be as accurate as I can with scaling it. But this is a maximum excursion. This is a 37 tick trade. It's not a great swing trade, but it's a pretty big trade. So you trade the pivot breaks. You don't trade into unbroken pivots. So let's just look at a couple of trades and look at some setups. Now I also, let me show you the market analyzer. Now, it may be a long time before you get a trade on a given instrument. You can wait, say, a whole day to pick up one trade, say on a stock, on Apple. Or, I mean, this is the Dow 30, and I just stuck it in there. You can put in an unlimited number of stocks, futures or Forex markets, and it may take you a long time to get an entry. So our market scanner is going to give them to you. When you first get that green buy signal, you got to roll over to the instrument, and I'll show you Caterpillar. Whoops. Here's Caterpillar. And look at that trade on Caterpillar. Now, obviously, this has been a buy for a while, and you're getting in late. But now, you can trade Caterpillar itself. Or, if you wanted to trade an option here on Caterpillar, and you got a $1.46 on an at the money or in the money option, you're up a huge amount of money. This is slightly in the money on this trade. These are the kind of trades you're looking for, and they come right off the analyzer. Let's look at another one. We could look at JP Morgan. It's calculating. I mean, there's now this is not a great trade. It meets all the criteria. Background is green, 15's green, 50's green, RL trend is green, money flow is green, background, everything, but it's just not a great trade. I mean, you have to vet them. But as far as the analyzer is concerned, it's shown you a potentially great move to the upside. We'll look at one more, and then we'll look at whatever you like. There's only right now, there's not almost everything here is flat. And I want to show you a trade. Let's look at Dow DuPont. Look at that move right here. Actually, the entry would be right here. Again, if you bought a call, you can buy Dow DuPont. If you have enough money to buy 1,000 shares of Dow DuPont, you're going to be up one heck of a lot of money. You're going to be up $1.13 on very small risk. If you buy an in-the-money call, you're going to double your money, or potentially triple your money. I mean, there's no better system if you want to trade, if you want to day trade options on stocks than an entry signal off of this software. It's going to make you big money. Let me show you the NASDAQ. And we'll have to go back a little bit. I mean, some of the trades on the NASDAQ are just unbelievable. I think I thought I had it here, but I'll just put it in here. Now, this is where you get moves that are hundreds of ticks long. Now, it's calculating. And because it has to load a lot of data. And remember, it's loading data from multiple markets. Because in order to calculate that first line, it's got to calculate the data from the Russell, E-mini, and Dow. So let's wait for everything to come in. See, right now, the market's really choppy. And it's trading right into support. So here it comes. So look at this move down on the NQ. Now, this could be traded right here at 8:42 this morning. Is your trade, not at the beginning, right here, where the trend line crosses the 50. Now, we don't have a wick, which puts us at a little bit of a disadvantage. You see the wick coming out here? So let's just very conservatively say our entry is right on this candle, because we have a pullback here. Now, when these candles hug this trend line, the pivot almost always breaks. And what we look for is separation between this line and the standard 15 EMA of an EMA. When you get this much volatility, that this space opens up, I'm telling you, it's a very, very low risk trade. Now, we're going to take the most ultra conservative entry. And this is a 37 3/4 point move on the NASDAQ. You know, multiplied by 4, that's almost 160 ticks on the NQ this morning. And this was quick. This trade started at 8:42 and ended about 45 minutes later, all the way down. Now, you're going to get these over and over again. Remember, this trend line is the key. You have to watch it, and you have to watch background. Let's watch and wait for the background to turn green, and here's another trade right here. Now, this is 1550. Well, that's 3:40 in the afternoon. But you're going to take it anyway. Now you have to hold overnight, and I wouldn't recommend doing that, but I just want you to see how good the signals are. And this is a 25.5 point move on the NQ. Now you have nothing here. Now here you have a long trade, right here. And this is going to be a relatively modest trade. And it goes 12.5 points. I mean, how many 12-point moves do you get? They have nothing here and nothing here to trade. If you look at this trade here, look at the quant line, money flow line. It's yellow. There's no trade here. You can't trade anything here. You're into support. And here's your trade. It was on 9/12 yesterday, short right here. And you're only going to go to the first reversal candle down to here. And that goes 18.75 points. 18.25 points. Now you're going to get these over and over. Now the thing is, now you cannot trade. What I'm trying to do is show you how hard it is to get a loser. And so far, we haven't found one. It's very easy for me to show you winner after winner. The key is, are you going to pick up losers? So far, we haven't found one. Now here's green background again. And you've got, look down below, green, green, green. This is just as good as green. The multi-time frame Laguerre on the higher time frames are moving up. So price is accelerating to the upside on the higher time frames. Conservatively, you could trade the pivot break. You're going to get a very nice move. More aggressively, because you're hugging the 15, just trade right through the pivot. And you're going to get it. This is another huge move. I mean, this could put you to bed in one trade, 18.75 points. This move down is one we can't take. The multi-time frame Laguerre has not turned. And we're not going to trade into a green. We call it the MTF, multi-time frame. We have no trade here. Here, we have a long trade. This is 8:30. No, you can't take it. I'm sorry. The trend line is yellow. We don't trade a yellow trend line. We have to trade into volatility. Here, the quant line's yellow, and you have no trade long. Now, what vets all this is simply the market analyzer. The market analyzer is not going to go green, and it's not going to give you a buy here. It's not going to give you a buy here. And all of these are loose. Well, this one, they're not killer swing trades. This one's very small, but you can't trade it, and because you don't have money flow, and you gotta wait until you have everything. Here, the quant is yellow, and you have no short trade. Here you have no trade. Remember, the trend line has to move below the 15 and create separation before you take a trade. The configuration is very specific because we trade with specificity. That's why we avoid 95% of the losers. Now, this is a potential trade right here. And this is going to be about 10, 20, 30. It's about 35 ticks. Each candle is 10 ticks. Here, yellow. Now, what we're looking for is the yellow low volatility zone to turn to an area of high volatility, and we're in right here. Now, it's not a great time to be trading, but it doesn't matter. We're simply looking at the setups. That's a 51-point move. Now, I think I've kind of clarified exactly how the system works. We want the trend line to be above the 15. This is a winner. Can't take it because the trend line is all the way down here. Can't take anything here because our RL trend is below the 15. So this is a move up and we can't trade it. And you know what? We don't care about it. We don't take trades that have associated with them more risk than we want to take. If you do, you're going to walk into those previous losers. And here is your trade, right here. Now you have to take it here. And this is a very nice trend trade. It's not huge, but not every one of them are going to be 50, 40 or 50 points. This one is only 13 points. That's a big move. And this move down, holy moly, again. Now the key is when you get the alignment, it works. That's all that matters. Here's your entry, 1 tick below the close, 1 pip below, 1 cent below, 19 points. Now on one contract, I'm not, if it went 20 points, it's 80 ticks at $5 a tick. I don't know, $400 on one contract, or is it $4,000? I don't have any idea. Whatever, it's a huge move. On one contract, you make an enormous amount of money at only $5 a tick. The trades are very specific and they work. Now, what I want to do is I want to show you our offer, and then I'll answer any questions that you've got about the software. Now, I'll just go through one stock for you in the course of a day. And let me pick a stock. We just need a stock that has some volatility. And I'm trying to think of one that might have a lot of volatility. I don't know. Remember, if you're trading an option on the stock, the price of the stock may not necessarily be that important to you. Now, the option is going to be expensive. We'll just try Apple. I don't know if Apple's got that much. We'll try Facebook. We'll see how Facebook sets up. And remember, we may not see great entries as long as we don't see losers. And let it configure. No, I don't have the Forex data feed set up. If you really want me to do it, I'll be happy to. But the Forex markets trade just like stocks and just like futures. No different. Now you can see so far here, Facebook is awful. Just awful. And the key is that you have no trades. You're trading here into support, and there's nothing to take. And that's it. That's the end. This is the whole day on Facebook. There's nothing to trade. And on Facebook, we're going to look when the market's open. Let's try a different stock. And what's really important to note here is the lack of ability to take a loser. When Facebook is simply not going to move, there isn't even a hint of a trade in here. A hint. Plus, you've got to break support. And this is just a mess. And you have no entry. Let's try something a little more. We'll try Google. It's a very expensive option if you trade it, but we'll take a look at it. We'll trade their Class A, I guess. Now, really with Google, unless you've got an unbelievable portfolio, you're going to have to trade the options. And look at the move right here. I'm not going to scale it. It's a big move. And if you buy an at the money or in the money call, you're going to make great money on this trade. Cannot take this continuation. You don't have trend line support. There's another move and a winner. This is a little riskier on the blue line, on blue background than green. Definitely tradable though. And you have this nice separation between the 15 and the trend line, and another move up. And look at this move down. Now here is your bread and butter move down. This one's a little riskier about right here, where the trend line crosses the 15. No trade here. The trend line goes flat. Here, yellow, no trade. Here, you could catch this trade, but it's way off the 15. And we're going to put an indicator in here. You've got to be within 5 ticks of the 15 or the trend. And this is too far off. Here's your pivot break. Down. And this is all yellow. And look at this move down. I mean, could you get that on any other software? And that's, I'm telling you, that's a gimme. Look at the trend line right here as it accelerates down. Very conservative entry right here. I mean, if you got yourself a call on this position, you're going to make an enormous amount of money. That's almost a $5 move. On an at the money or in the money call, you're going to get a doubler. And you're only going to buy a weekly option because you're only going to be holding it for an hour or two. So this is a huge move. And the most important thing I want you to see is the lack of ability to take a loser. Here's your entry. Now, honest to God, I have not found a loser. I can't find one. Now, here's your loser. It only goes 20 ticks or 20 cents. That's not going anywhere. And that's a trade. That's tradable. It's the first one I found. There's the break and the run. So I think you get the idea. And look at this move here. Right here. Pull back. The trend crosses the 15. And another gigantic move up. If you bought one call that was at or in the money on these moves, you'd make a ton. You have to have a lot of money to buy a Google call, no doubt, but you're going to make a ton of money. And what's important is the system is just not giving you a loser. That's really the key. And this move down is only tradable right here. Price is hugging the trend right here at 958. So I think I've beaten this to death. I think you understand how the system works. You see its specificity for trading. You can watch as many stocks, futures, or Forex markets as you want. Trust me, the Forex markets don't move any differently. I mean, if you want to watch 100 stocks, you can. If you want to watch futures, Forex, and stocks at the same time, you can. As many instruments as you want. You just wait for that initial buy to come up and go right to the instrument. You want to catch the move right at its inception. And this is exactly where the buy would trigger, because you get the pink background, the red 50, the red trend, the red money flow line, and both oscillators to the downside. You're going to get a sell right there. If you just move over to there, you've got the sell. So that's the system. And, you know, I didn't cherry pick the trades or cherry pick the instruments. And believe me, I didn't look ahead and see what I I mean, you can pick anything you like. It makes no difference at all. They are just killer trades. Now let me find the slide, if I can, in this mess, and I'll show you the offer. Let me move the analyzer off. And I'm not even going to scale, I'm just going to show it to you. Now, the system's normally $2,000, and we're selling it as a special for $9.99. You're going to get free upgrades for life and free updates. If we make it better, you're going to get that improvement. And we always look to make our systems better. As anyone in our trading room knows, you get a 10-module weekly educational training session. You get 450 tutorial videos. Sergio who's got a master's in computer science, will install this software on your platform or on your computer. It works on NinjaTrader 7 and 8. If you have Thinkorswim, your data feed will power it for free. There's a couple of other platforms that will power it for free. If you don't, you may want to trade a demo and just take the entries on whatever software you're trading, because the entries don't come fast, because that candle's huge, and you can take it on any platform. You also get 1 month in the live trading room with me. Now, I don't swing trade, but you're going to learn the whole trading methodology, and the learning curve is going to be tremendously quick. It's just to help you. And listen, you're going to make money in that live trading room. If you were in the trading room this week, you would have covered the cost of this with a lot of money left over. And I trade live on with Chart Trader up. I take slippage and all the stuff that every day trader has to deal with. And we made really nice money. So I only trade 2 contracts or 3, so everybody in the room can stay with me. And we made $1,400 bucks. And I'll show you right here. 1,410. The biggest drawdown we had the whole week was $300. And look at that Sharps ratio, 1.89. And we had very few trades, very small commissions. That's a lot of money to make on very few contracts. If you would have doubled your contracts, you could have easily made $2,500 this week, but I keep my number small so everybody in the room can stay with me. Now, the first 10 get 6 months of my Elite Trading newsletter. Now, I was going to open it up and show it to you, but we just cashed out our 6th winning options trade in a row. And the one we closed out was Cisco. Of the 6, we closed out WEC Energy, we closed out Sony, we closed out Comcast. I can't remember all 6, but we're up a ton. I also look at small biotechs coming up for FDA approval for a stage 2, phase 2, stage 2, phase 3 medicine. And I'm pretty good at picking what's going to get approved and not. We have a trade coming up this weekend. I'll let you know if you come aboard. I'm going to tell it to you. It's a great opportunity on a tiny micro biotech stock. I mean, the stocks we trade are 50 cents or $1, sitting on a pile of cash with no active medicines yet in there coming out. We're looking for their first big blockbuster approval from the FDA. And you're also going to get that market scanner, which is $1,000. It expires on Sunday at midnight on September 15th. So I'll leave that up. That's our phone number, and I'll answer any questions that you have. Hey guys, how you doing? Let me just scroll to the top here. Okay. You're back. I know you are a newbie, and I remember you. It's good to see you. Hey, Frank. The time frame we're scanning for in the analyzer, Frank, is exactly the same time frame we're trading. And actually what the scanner is doing the same thing that our software is doing. It's doing a multi-time frame analysis. It's basically summing it. What the scanner is doing is doing a summation of all of the stuff we're looking for to get a trade. It's looking at all the key indicators. I mean, it's looking at this quant, background bias, the 50, the 15. It's doing that complete analysis. So all the key independent variables that we look at in order to take a trade, it's looking for. And it's only going to give you a buy when they're all there. Now, it doesn't necessarily mean, I want to be clear that you got an entry. I mean, price may not kick in until the market's very overbought or very oversold, but it's oftentimes going to give you a great entry. And just to take a quick peek is very worth it. And it just saves you an enormous amount of time. If you have 50 stocks up there, how many perfect entries do you want to get? I mean, if you can get 2 or 3 in a day, you're going to make a lot of money, and you can conceivably do it. And you can do it off futures, trading futures and stocks at the same time. So it's doing in essence an entire summation on a multi-time frame basis of what we're looking for to trade. Okay. Hey, John. Yeah, John, I mean, we always do a multi-time frame analysis. Per your explanation, the RLT must be looking at price on the trading chart and not higher time frames. Well, I'm not sure what you mean by that exactly. The analysis is a multi-time frame analysis in almost all cases. I'm not really, I hate to pass your question by, but I don't really get it exactly. That's the thing. No, DD, the reason they don't lag is because they're taking their cues off the higher time frames. If they took their cues off your trading chart, they would, by their very nature, they would lag. But when all of the data on this chart is accumulated from the higher time frames or from other markets, like this first line does, then they lead price. And remember what I said, and I mean this. This green line is not, green background is not formed by this price going up. It's formed by an alignment of the 2 higher time frames going up, creating the green, and then price almost always rises into it. So that's a leading indicator. If you're on the right edge and you see that green, and you see that money flow is green, and both momentum assessments, multi-time frame and chart, are green, price is almost always going to rise. So this is a leading indicator. It has predictive value how to trade the right edge, unlike 99% of the stuff out there, which has no forward-looking ability. And that's why we make money in the live trading room, because we have that ability to look forward into the market. I mean, my forte is mathematical modeling, and this is modeled to create forward-looking indicators, nothing lagging. If you got lagging stuff, DD, it's worthless. Just dump it. Okay, I'm sorry, Frank. This is Ninja Trader, Richard, correct. But like I said, it works on Ninja 7 or 8. Thinkorswim will power it. If you have like eSignal, one of the other platforms, you can use a demo data feed and a demo download of Ninja, the power for nothing, and take your signals on the chart on the software that you're trading. I will provide, I mean, you can just go to Ninja and you can download NinjaTrader 8 in 2 seconds. We'll configure the whole thing for you. And it'll trade exactly like a live data feed, give you the exact same entries, and you just have to take them on your own software. Hang on 1 second. I did, Graham. I did, JJ. I have your modified Laguerre with a setting of 13 compared to yours. What settings are you using? JJ, I can't tell you because all the settings in here are proprietary. But you know what? If you call me or send me an email, I'll let you know. Okay? And remember, this is a very long time frame. So you're only to get this MTF Laguerre choppy when price is really a pain in the neck. When it turns solid green is when you know when to trade. When those 2 higher time frames align, that's when you're good to go. When it keeps changing color like this, giving you a short trade above the 50, you don't even touch it. Short trade above the 50, you don't even touch it. I mean, there's just nothing to trade in here. Then all of a sudden, boom, all 3 lines go green. The pivot breaks and you've got a long trade. That is no accident. Money flow came in, momentum aligned on multiple time frames. Your chart, see it rising into the MTF. You have a multi-time frame alignment and trend. It's a little weaker on the cyan background, but still absolutely tradable. And up you go. So that's the leading nature. And it has nothing to do with price on your trading chart. Nothing. It's a 10 Uni-Renko, Gary. Well, in the futures market, I don't expect you to trade options because it's already a leveraged instrument. Every tick gives you 10 bucks. So I don't think you want to trade an option on a future. I know it can be done. I wouldn't. You want to trade an option on a stock, which is not leveraged. I'm Eastern time zone, Ken. Hey, Robert. Hey, good afternoon. It is being recorded, Robert. Hey, look, 35 ticks a week, all you need is 1 swing trade. That's what I'm telling you. You know what the problem is? It's the market's dead. I mean, the last webinar I did, we had a perfect entry evolve. But remember, this is a swing trading chart. And look at the right edge. See this number right here? It's telling you the number of shares being traded on Google per minute. Now, so far for this minute, it's 305. Now, if you're trading almost no contracts no shares on Google, the market is DAD. So it just would be impossible for me to show you an evolving trade here. But the trades that I'm showing you in retrospect are valid. See, now Google's starting to pop. You can see the wicks, and you can see you have a potential trade evolving right here. Just you need the 15, the trend to cross the 15 to the downside. And you might have a potential trade here. But here's the thing. I'm not going to trade a market that's got no volume. And this market is dead. So that's why I can't do it, John. Otherwise, I'd show you I'd show you all these trades set up live. And it's no different if you're on the right edge when this trade evolves or you see it evolve here. You're going to take it anyway. You know what, I'd put Apple in. Apple doesn't have a lot of volatility. Apple is more like Facebook. I'll be happy to show it to you. Let it load. I'll just pull these down again. And it does this because they're multi-time frame. Now here's a short on Apple right here. Gorgeous short. See the trend line crossing the 15? All red, all pink, right here. Here, your RL trend is yellow, right through here, no trades. Right here, RL trend is yellow, you have no trades. The RL trend is above the 15, you have no trades. Here, you do have a short trade, right here. It's not a bad trade. It's 10, 20, 30, 40, 50, and change cents on a trade. Here's a long trade. And let me tell you, Apple doesn't have a lot of volatility. On this continuation, you have no trade. Money flow goes yellow. The long-term gear goes red. And you have no continuation trade here. Right here is a loser. And I don't want to ever want to represent that you're going to get 100% winners, because you're not. And here's this trade into support all the way through here. So this, I think this is one of the rare losers we found, where you would take the trade short right there on Apple. But then you're going to follow it up with a nice winner here, a really nice winner here. Can take this trade, a huge winner here, nothing here. So you follow it up with 3 winners on Apple. So, you know, that's Apple. And finding a loser, I mean, is normal. Eventually, if we look at enough instruments, you're not going to get 100% winners. And if you expect to get 100% winners, don't, because you're not. It is being recorded, Robert. Okay, the Russell, no problem. It's not moving. It's a loading. Now, you know the correlative markets on the Russell, line number 1, the Dow, the E-mini, and the NASDAQ. They all got to be moving in the same direction on a multi-time frame basis, creating a strong uptrend or downtrend. Now, it's taking a while to load the Russell, but give it a minute. Now, this is really road testing this indicator, this software package. And you don't see that often with anybody who does a webinar. They show you lousy JPEGs, and here's your entry right here. Now, this one is a lock through the pivot because it's right up against the trend lines. That trend. Look at that move up on the Russell. It's an enormous move. And the guys that trade this, that's 128 ticks. Well, it's 12.8 points. It's 10 points to, it's 10 ticks to a point. It's 128 ticks. That's correct. And there's nothing else. There's no trade. None. The trend line here is not below the 50. Then it goes flat. Got nothing here. Got El Zilcho. And there's no volume. So you got one monster trade, 128 ticks on the Russell today. So I would go through the whole thing, but I just don't want to take that much more time. Okay, Procter and Gamble, sure. That's one we haven't looked at. We'll show P&G. Now, we're not going to see much volatility on it. You can see Procter and Gamble, not a great stock to swing trade. You do have a nice trade here at 1046. That's a really nice trade. This is right at the market open. I'm not crazy about trading the open. I'm gonna be honest with you. I could claim that's a winner, but I'm not going to. That's a beautiful trade right here at 1004. This is right at the session break. And here the trend line is below the 15, no trades. Now right here you have a long, no you don't. No quant, red Laguerre. Nothing here either. Multi-time frame Laguerre is orange. No continuation. That's it. I mean, going back a lot of days, you only have one trade on P&G. It's a winner, but Procter and Gamble is just not your, it's not your major, you know, if you want to swing trade, an option, P&G would not be where you would go, but it doesn't walk into any losers. That's the key. As I said, Richard, the trend line is an amalgam of a 15-period moving average and an ADR ADX line. And the ADR ADX is right in the indicators in Ninja, somewhere right here. Here's the ADR ADX. They call it the ADXR line. It's a volatility component. It's a volatility measurement. So we want to trade when volatility increases to the point where it pushes it above our 15-period exponential. When it does and everything else aligns, this is another winner. I didn't see it. It's not a big winner, but you're not going to get huge winners on P&G. It's right there. Very, very key line. And it's really going to keep you out a lot of losers. And again, look how the market moves. Low volatility, yellow on the trend. High volatility, green on the trend. Low volatility on the trend. High volatility on the trend. Low volatility on the trend. High volatility on the trend. Low volatility. High volatility. It's the way the market moves forever. It's like a contracting and expanding spring. It always moves. We want the best trades come off a long yellow trend line, and then they're going to explode to the upside. It's a really, really great line to utilize. And it's the first time we've offered it to anyone in a webinar. Oh, I'll put whatever, if it was short. Well, I think at 158, maybe I hadn't, but I think I showed you how the scanner worked a lot. I mean, we went to instruments, we went to the DuPont. Now Apple is just showing a buy. We can go to Apple, but I mean, you see how it works. And Pfizer is just flashing on and off. We can go quickly to Pfizer. Now, Pfizer doesn't have enough data. It's so low volatility. You see these, it's red, red, red here. This is red, and this trend line is probably just wiggling because there's basically no volume at all. I mean, I don't know why we don't have any data, but going back all these weeks, this is all the data we have on Pfizer. So obviously we would need a lot more. We would need to go back 100 days. It's just not a very volatile instrument. I mean, here's your volatility. If we go to this is a stunning instrument to trade. I mean, here's where you can make 200 ticks without even breaking a sweat. I didn't show it. I'll just show it really quickly. I mean, Pfizer is not a stock to swing trade, but it was briefly flashing, but it doesn't have enough data. And you can easily see that. Now let gold load for a second, and I'll continue to answer questions. Yeah, the point about Forex, George, is it, although I'm not showing you Forex markets, it trades exactly the same as futures and stocks. Exactly. You're going to get the same entries. Everything is the same. So there is no difference. If you want to swing trade the Forex for 150 or 200 pips, this system will do it for you. Now here's gold. It's a choppy market, and let's let it all come out. So for the background bias and all the quants and the multi-time frame gear, you see all the multi-time frame instruments take a little bit of time to evolve. So let's just go look at this trade right here. I won't cherry pick it, but this is a stellar entry on a wick and a pullback. Now it's early in the morning, no doubt about that, but it's 251 ticks. Now, if we move further down, nothing here to trade. There's your trade right here. Now, you don't have background. You got to wait for background to evolve right here. And here you have the quant and both gears, and here's a really nice move down. This is about 72 ticks. Move up, move down. See the trend line never drops below the 15. So there's no short. Here it drops below the 15. You can take it here, more safer here. Your red, orange, orange here. Now this is a rugged market to trade. And this is a really nice trade. It's 48 ticks. Now in the master class, I'm going to tell you why you don't take these trades. You always want to take a trade on the trend off of a yellow, off of low volatility. When volatility starts going yellow, red, green, you want this long period of yellow and then the break. Long period of yellow, then the break. When it starts going like this, you don't trade it. So you couldn't, this is not a trade anyway. And I'm not, alibying for the system. Trust me, this is a loser. I push it right out there. This is no trade anyway. You don't have the quant. But this is not a short either, actually, because you have the multi-time frame gear green. But it's also not a short because you always want to leverage this expansion and contraction of volatility. Look at this move. I mean, this pivot breakdown, and yellow volatility, the breakdown. Here's long yellow. And this is in a classic setup, but it's not bad. That's really how you want to trade. I mean, there's so many winners here. It's kind of pathetic. And the trend line keeps you out of all the losers. So there's nothing that's going to give you trades like this. I'm telling you, this long trade right here, there's your entry. I mean, that's 80 or 90 ticks right there at 9:01. It's I don't think it's I think gold opens earlier in the morning. That's 94 ticks. I mean, if you got 94 ticks on your first trade at 9 o'clock in the morning, would you stand down and end your day or what? If you traded that with 2 contracts, I mean, you can make $1,500 or $2,000 almost. So you're done. And it's a very, very low risk trade. Look at the trend line crossing the 15 right here. So listen, I couldn't beat this software to death any more than I have. I mean, if it had multiple losers, they'd be right in your face. And all I can do is find great trades. It took us a long time to optimize it this way in order to configure it so that basically it's going to almost, there's no guarantee for a winner, but you're going to have 80 to 85% precision with this trading system. And your winners are going to outstrip your losers substantially. Sure, we'll post the recorded video. No problem. Hey, Les. No, this is sorta for day trading, but it's not really for day trading. Remember, these trades evolve sometimes over hours. Now, I'm showing you fast markets, but if you trade the currencies, it could take a whole day. Now, remember, in the futures market, you don't really want to hold overnight because they're a leveraged instrument. And if they gap up significantly in a short trade or gap down in a long trade, I mean, they could really hurt you. So I purposely picked a time frame that may take you 2 or 3 hours to evolve. So you're not going to take a trade 3 o'clock in the afternoon. But if you are, and you're up 30 or 40 ticks or 30 or 40 cents or pips, and the session's going to come to a close, don't hold overnight. But if you trade the lower volatility instruments, you may hold these 2 or 3 days. So this is not necessarily a day trading tool. It's a swing trading tool. And nobody would trade this kind of candle size on a day trading chart. I mean, I traded 2 or 4 Uni-Renko on a day trade. This is a 10 Uni-Renko. And it's the perfect size. And the candle configuration is perfect to capture these winners. If we go longer, it just doesn't configure well. I mean, this is the best optimized system. Remember, this is a closed system, and I don't want to go into my spiel about trading a closed system, but I'll show you something cool at the end, if you stay to the end. We use the same indicators for scalping, Anupam, but they're all set differently. The software is completely reconfigured. So if you come into the trading room and you want to day trade, you basically can use the same system to day trade. We rely on the quant, the dual gears, background bias, the trend, and really you can trade any time frame you like. But this is all about swing trading for people who want to get into a trade, ride it 100 ticks or pips or a buck, up on a call, down on a put. That's this configuration. Now it's slightly different than the full system, but not much. I did take out some things that are just irrelevant in swing trading, but the core of the system is exactly the same. Good. Okay, our Dr. Keith's service is completely different. We always trade a 10 tick when we swing trade. When we day trade, we trade a 2 or a 4. But Sergio can configure that for you. Don't worry about that. This webinar is for swing trading and for getting big moves. And I'm telling you, I find this so compelling that I almost want to swing, exclusively swing trade, because I mean, I would love to sit there and make 100 ticks, and you very rarely get a loser. So it's a very, very powerful platform. Yes, Richard. On the swing trade, we always use a 10-tick Uni-Renko. And the thing is, though, the reason why it's not a brick, Richard, is because on the right edge, we were careful and we create wicks. You have to have wicks to drive an oscillator, and the Ligier is an oscillator. And although the system doesn't hold them, because we don't want to store the wick data, we're going to move to that and give you the option of storing the wicks. If you do, it's going to use up a lot more system resources. If you store, say, 500 candles worth of wicks, but we'll give you that option. Right now, like if I hit F5 and refresh the chart, the wicks will disappear. They're not going to be held by the software. And I talked to Serge about keeping the wicks, and it's simply a matter of storing the data. Now, we did store it, all the data for our market profile, which we don't use anymore. But you can see the wicks are gone. They're not stored. So it's really much more complex than a brick. Yes, Robert, it is. These are, Jeffrey, we don't, the time frame is a 10 Uni-Renko. We're not trading a time-based candle. It takes a fairly long time for the candle to evolve. But right now we're trading horrific volume. I mean, the market's done for the week. But this is not time-based. No, Gary, I already showed you crude on a 10 Uni-Renko. I'm telling you, you get gigantic moves on crude. I would have thought that, but after we sat down and we went over probably 40 to 45 different Uni-Renko settings, this one just clicked in, and the trades on gold and crude are stellar. I mean, stellar. I don't want to be redundant, and there's still a lot of questions to answer. But if I go to crude really quickly, you're going to be, you're going to be shocked at the crude trades. They're incredible. Like, look at this trade. I'll show you a better one right here. Right here at 1048. I mean, you don't take this trade, you got to retire and get a day job, because it's just too perfect not to take. You're in one tick below, and the maximum excursion on the trade is 132 ticks. I mean, you got to give me a break. I mean, it sets up incredible on crude. Here, you can't take these trades, but you can take the pivot break right here, because it's hugging right up against the 15, and this is another 50 or 60 ticks. So what can I tell you? You get incredible moves. And this is the reason why I didn't want to project slides, and I didn't want to show you JPEGs. I wanted to just simply do a webinar, which I don't usually do, right off the platform, to show that I'm not cherry picking, I'm not hiding the losers. You just don't get them. And right here, you're trading into support. You can't trade. There's nothing. And for the rest of the morning, that's it. There's nothing forming. Crude just died. No trades, no losers, no setups. Ken, the higher time frames, I don't usually tell you this, but they're in range. And I don't want to tell you what they are because they're a little proprietary, but they're two higher range time frames. But they're long range time frames. They work out perfectly because we use fib numbers, and there is symmetry to Fibonacci. So we don't use higher Uni-Renko time frames, we use higher range time frames. And you would know that anyway, just by opening up the back end. If you open up the MTF Ligier, you're going to see the input. That's a 21 range. It's looking at the 21 and 35 range chart to come up with this assessment. So that's what we're looking at. And it works superlative. That's what we day trade. Our higher time frames are range charts. You know what, JT? I'm not going to show you a daily time frame only because I have looked at it. It is not nearly as good as this. I mean, you can do it if you want to, but you're never going to get setups like this. You just got to trust me. If you compare the dailies to this, it's not even going to be close. And one of the first things I looked at was a 2-hour, a 4-hour, and a daily. And the setups, listen, if I thought the daily was better, I would be offering it to you. It doesn't work as well. This configuration gives you the best trade. Look, when you can get 75 ticks here and you can get 132 ticks here, why would you want to trade a different time frame? So I mean, honestly, nothing's going to set up better than this. And this trend line, which nobody else has ever created, honestly, is one of the keys to keeping you out of the bad trades and signaling to you when you've got a great setup. It's really an awesome line, and it's the only one that I opened in 2012 with on this platform that's lasted 8 years. Is this line? Everything else has been modified and changed, but this was one of the most cleverest things I developed, and it really, really works. And it's improved our day trading immensely. I had very few losers this week. Hey, listen, Pre, where you take your profit is what we would discuss in a master class, because it all depends on your risk tolerance. I mean, if you get a trade that goes 132 ticks, there's really no signal here to exit. But if you just want to get out because you have a certain amount of money you want to make, there's nothing wrong with it. But until you get this up candle, there's no exit. I mean, you can ride this thing all the way down. So you're not going to get 132. You're going to close on your first up candle. You're going to get about 110 ticks here. And that's your first clue to leave. And look at the long-term Laguerre, the chart Laguerre. It's orange, then locks, and it stays locked. And look at all these counter trend traders. I mean, do they get beaten up or what? This is where we don't want to wind up. Long here, long here, long here, long here, because the market was just in for more down, and we wrote it down again. We beat them all up. These are the commercial traders who wind up giving us their money. No problem, JJ. All right, listen, I'll show you an hour. I'll show you a 1-hour chart. Now, the 1 hour is not optimized on background or anything else. All you're going to be able to do is see candle configuration. Remember, the multi-time frame chart is set here on this time frame. I'll show that last, JJ, because the background is not going to work. If you want to trade the 60-minute, Sergio can configure the software for you on a 60-minute, but he's going to have to change all the settings for all the multi-time frame assessments. So it's going to throw everything out of sync. So it's really not going to signal you into the trades appropriately. That's the only hesitation I have for that. Platform, it's best to just use it as a backup when watching. Yeah, yes, that yellow means low volatility across the board, John, on all the time frames. Because remember, they govern the movement of price, and look at the background. It's constantly changing color. And that's the multi-time frame assessment of trend. Look at the multi-time frame assessment of the Laguerre. It's going from light to orange to red to green to dark green to orange, and it's reflected in this low volatility line. No, it's the, listen, Les, you can swing trade it. And if you, it's not just for day trading. If you want to take a bigger candle, I mean, I'll work with you on a 20 Uni-Renko, but you're going to have to hold overnight. That's all I'm telling you. I purposely made this because most traders don't want to hold overnight. And if you're willing to hold overnight, I will work with you on that. But if you're trading futures or Forex, I would not hold past the day session. Same thing with stocks. Once the session closes, something may happen at night, and those things could gap up or down an enormous amount. So I wouldn't hold overnight, and I purposely configured it so you can make a huge amount during the day session and get out. When you go to sleep at night, you don't have to worry that someone's going to set off a bomb in Midtown. I mean, God forbid, in some major city. Trump isn't going to send out a tweet. You don't have to worry about those things. So it's really up to you on that. My recommendation is this is the best time frame, and this is this is a swing trade chart. If you can make 100, you can make a 250 tick trade. That is no day trade. I mean, that's a swing trade. Okay, just hang on, JT. I'll show it at the end. Listen, Ed, this is meant to use to trade intraday, but it's meant to hold for very long moves. I mean, we're really just cutting and we're slicing and dicing definitions here. Look, if you get a trade entry that's perfect at 3:45 at night in the evening, you're going to hold overnight if that's what you want to do. That's what makes it a swing trading platform. I mean, I'm showing you trades are revolving in the middle of the day. But if you get a trade like right here, this trade is occurring at 8 o'clock at night. Well, it's 8, no, this is 8 o'clock in the morning. But if you get one on a session close at 4 o'clock and you want to take it, I mean, you're holding a multi-day instrument. And I think we're just splitting hairs here about swing trading and day trading. And I think it's irrelevant. All that matters here is that if you get a trade and an entry and it's low risk and you make 132 ticks, I mean, that's all that matters. You take a pivot break on a perfect trade, you make 75 ticks. What else matters? No, Ken, it does not matter what the tick price, what the stock price is. The 10 Uni-Renko is the best to trade it. You saw how great it worked on Google. It does not make any difference what the price of the stock is or the volatility. It surprised me, but I looked at like advanced micro devices. I looked at the smaller stocks. I looked at Google, Amazon, Facebook. The 10 Uni-Renko, it's only 10 cents in movement in price on a stock. I mean, if you can't get that much movement, it doesn't have enough volatility to day trade. But the 10 Uni-Renko is going to work the best on anything you trade. You saw P&G, Procter & Gamble. In a whole bunch of days, it only gave you one perfect trade. And the perfect trade worked. And it was a really nice trade. On low volatility instruments, you're not going to get many setups. But if you use the scanner and it hits you and it flashes a buy, you're going to get your entry. We don't, Rian, because this is such an enormous move that it really depends on your risk management. I mean, it's hard for me to tell you whether to sit in the trade for the whole move. What I would do is I would take the trade until I got an exit. The exit's the reversal candle. go for the 174 and take the down candle and exit. It's an automatic exit on the NDT. You're going to give back, but look how far it takes you on these moves. I mean, that's the most conservative entry possible. You could have taken this candle a little more aggressively here, but I only want to give you the most conservative entries. And this is a 174 tick trade on crude oil. And it evolved from 7 o'clock in the morning. And this is why it took all day for the trade to evolve. It didn't finish until 13:23. That's hours and hours sitting in this trade. That is not a day trade. And personally, if I got into that trade, I'd take the down close. Didi, what is the limitations of the technique? When will this not work? No, Didi, listen, it doesn't matter whether it's a long trade or a short trade. It only matters all that matters is it's a trending market. And because you've got the background bias to back you up for a multi-time frame alignment and trend, listen, let me rephrase your question. Your question was, does it work in a bear market? I wouldn't ask, does it work in a bear market or a bull market? What I would ask is, does it work in a choppy market? Does it keep you out of trades when it chops? Hey, if the market goes straight down, we get great trade. Look at this short trade here on this wick back. I mean, this is a trade I haven't even looked at. This is a short trade here. I mean, if I scaled it, it's probably 100 plus ticks. It absolutely makes no difference. That's 137 ticks to the downside. So it makes no difference. And you see the multi-time frame alignment short? It doesn't matter. All that matters is the market is a trending market. When you don't get a trending market, you won't see green and you won't see pink. And it keeps you out of trades right here. Chop. Right here. Chop. Right here. Chop. Right here. No chop. I didn't look at this trade either. Here's another one. I mean, for an enormous winner, as long as you get a trending market on multiple time frames, it's going to go in your direction. It's very hard for your chart to go long when the two higher time frames are accelerating to the downside. And you know it's accelerating because you've got this multi-time frame Laguerre and your chart Laguerre red. And this oscillator measures price acceleration. I mean, we went over that because I want you to understand exactly what it's assessing. And this move down is 155 ticks. I mean, for me, if I traded 3 contracts, I'd be good for the week, about 155 ticks. So, I mean, it doesn't make any difference, bull, bear, as long as it trends. And if it doesn't trend, you will not get this background. And it's no accident that price is falling here because your higher time frames are aligning. And I pretty much gave it away. Your higher time frames were a 21 and a 35 range. That's the edge it has, DD. Every single thing on this chart does not look at price on your trading chart. It looks at the higher time frames, or these look at other markets. And the only thing that is assessing price on your trading chart is this Laguerre, because you want the chart on your Laguerre, the Laguerre on your chart to be in your direction. Nothing else here is making an assessment off a price on your trading chart. That's what separates it from the next 1,000 software packages. They all use price on your trading chart, and that gives them no forward-looking ability whatsoever. That's the key, and that's why it's different, and that's why it works. I wasn't going to show it, but I'll show it to you. It's a 1040. It's a 10-20-40, Jerry. No problem, Les. Sure, Anna Pam, we'll give it to you. Just send us an email to info@rightline trading. Okay. Sure, this will find the stock to trade for you, Didi. Absolutely. Dr. Keith's service has nothing to do with this. I mean, Dr. Keith is looking at something else. He's using seasonal trends, and he doesn't use Vantage Point. He's a seasonal trend trader. This is not looking at seasonal trends. This is trading in between any seasonal trend. It's based on very complex technical analysis, really. Frank, I don't know, Frank has left the room, but I don't know where he gets Vantage Point from. JT, the only time I would hold it more than one day is if you're in the middle of a trade and you want to take the risk of something overnight happening. Let's say you get a perfect entry at 3:30 and you want to take the trade and you have to hold it overnight. I mean, that puts you at risk, that's all. I mean, crude could gap up or gap down. A stock could gap up or gap down. I don't recommend holding these overnight. Now, the thing is, I trade options, and if you're one of the first 10, you're going to get all my options trades. I take them all live myself, but my options trades, for the most part, are at least a month in duration, and sometimes they're 3 months in duration. So I don't care if something gaps up or down a little bit in the morning. I don't care. That's not going to hurt my options position. But on a leveraged instrument or even a stock where you're looking to swing trade, that can hurt you. And remember, if you're trading Google and you're in an options position leveraged off the stock, you're taking a lot of risk. Listen, I'm just trying to give you my most conservative trade plan, and it involves avoiding risk. I always believe that part of day trading or swing trading is to never look risk in the face when you don't have to. So if you don't have to hold overnight, I wouldn't. If you do want to hold overnight, if you're going to get my options alert, I'm telling you, my options trades are incredible. They're really good. Now, I take options trades a little bit differently, but I use my software. I don't want to get into an options discussion, but I trade options really well. I've in the last 2 months, I'm up 50% in my portfolio, not including year to date. Just in the last 8 weeks, when this market's been on a bull move, I have cashed out an enormous number of winners, just because I know how to trade, and you're going to get those if you want to take a swing trade position. Okay. No, I showed you, Gary. 10, 20, 40. One sec. Hey, listen, you could trade any session on this, Pre. Doesn't make any difference. We're opening up a trading room that starts at 8:45 in the evening Eastern time. If you come aboard, you're going to be in that room. And they're going to be trading the Nikkei. It starts on Monday. Now, it's not a swing trading, it's a day trading service. But, they're leveraging, I believe, the Asian Open. So if you want to trade at 8:45 Eastern time, we're opening up a room, and these guys are stellar traders. There are four of them, and these four guys know their stuff, and they're trading crude, gold, the Nikkei, and some of the futures currencies. Look, it doesn't make any difference what you trade. I mean, the market doesn't know whether this is the US Open or the London Open or the Asian Open. I mean, it doesn't make any difference. Yes, a swing trade can be less than 1 day, for sure, JT. Or it can be 2 or 3 or 4 days. It depends how you define it. And it depends on the length of time you want to hold it. I purposely configured this so that you could get great trades that are huge trades, but without the risk of having to hold overnight. Why would you want to hold overnight when you can get, I know I'm being redundant, when you get 175 ticks with no risk of anything happening at night? I mean, you're up pretty early in the morning. It's 7:47 in the Eastern time. It's not that early. I mean, and you're done. And you don't have to hold overnight. There's no risk involved. That was my purpose here. If you guys want to hold a future for 2 or 3 days, we can make the candle. I mean, for me, that's a different purpose. And I think you're accruing a lot of risk. For me, as a day trader, that's a swing trading chart. And again, I think we're just splitting hairs, because isn't the only goal we all have just to make money? I mean, that's the only thing we want to do, is we want to make bank. So, I mean, whether you call this a long day trade, which I would not do. This is a swing trade. Whether it's a multi-day swing trade or not, the definition doesn't matter. All it is the potential to grab 100 ticks on a single trade. And that's all that matters at the end of the day. If I showed you a chart that's set up for 3 or 4 day trade and 40% of those trades were losers, I mean, what good would it be? That's why I think this is so powerful. Yeah, the 10 Uni-Renko, JT, correct. The trading room is open in the evening from 8:45 until they hit their profit target. In the morning, for me, I'm looking for $300 to $500 a day. This morning we hit it at 10:30 in the morning, and we were done. And we have our other rule, John, is if I get 3 winners in a row, no matter how much money I'm up, we stop. So it's 3 and out, or our profit target of $300 to $500 a day. I'm looking to make a minimum of $1,000 a week after commissions, only trading 2 contracts or 3 contracts, very small amounts. I got guys in that room trading 10 lots, 20 contracts. I mean, they make $3,000 and $4,000 a day. I'm not there to show flashy numbers. My most important metric is my win percentage. My win percentage is 75%, 80%. It's up to you how many contracts you want to trade. And I showed you how much we made. I'm not hiding it. It's right here. 1410. Maximum drawdown for the whole week was $300. And some people will make 1410, but your maximum drawdown will be $1,500. How many people can withstand a massive drawdown and then all the way back up? I like a granular day. My profit targets are modest, 300 to 500. Biggest loss I took at any given time in the middle of the session was 300. So it's very easy in a small portfolio to trade it because our losses are very tiny. And you're going to be in that room for a month. And I'm going to do my best to pay for the software for you, because my minimum goal is $1,000 after commissions. Absolutely. We'll give you day trading templates, Anna Pam, no problem. I'm a very conservative trader, Pri. I really am. The last trade I took was a full winner. I took it off a little bit early, and burnt myself. It was only $75, but I'm just very conservative. Other people take a lot more risk and they usually make a lot more money, but that's just the way I am. It's my personality, and I have to go with my personality. But I've gotten ultra conservative on trading. If it doesn't set up exactly the way you see this long trade, with separation between the 15 and the trend, with green background and green, green, green below, I don't care if it goes 100,000 points. If it doesn't set up, I'm not taking the trade. I have tried to eliminate fear of missing out completely, and that's what makes you a profitable trader. Never worry about the missed winners. What you worry about is walking into a loser. And if you don't care about missing a winner, wait for the perfect setup. You will really, really become a successful trader. Because I tell you, 50% of it is mental. You do need really good software, but a lot of it is emotional. Dwayne, the scanner will work for futures. Listen, I have it up here. Here's futures, gold, here's stocks, here's a future. Now, the only reason it won't work on Forex is I don't have a data feed hooked up. If I had a data feed hooked up, you'd get the same thing. So it works on any financial market as long as you have the data. So, and it trades exactly like this on Forex. No difference whatsoever. Doesn't matter what instrument you're trading. And it tells you right here, the month and the, actually this is the wrong month, NQ rolled today. But it doesn't matter for these purposes, market's dead. That's all right, Les, it's no problem. No, Jerry, this Uni-Renko is configured and optimized as a 10-20-40. It's a very unusual configuration, but it took us a long time to figure out the best setting to get us these great entries. And let me tell you, that's all part of optimization and mathematical modeling. If you change the setting, you will decrease the number of winners and increase your risk. Pre-writes, as a newbie, I don't care what kind of Renko. I just want to try to make 6 to 10 ticks in the Enko Russell done for the day. Don't want to make 1,000. Happy with I know your goal. And I'm telling you, this is the lowest risk, highest reward trade you're going to get, because the potential here is 100 ticks and you're only looking to make 10. So, it's up to you to decide whether you want to come aboard or not. Okay. I've seen you in a lot of my webinars. I know you're a really nice guy. I know what you want. You want some lattes and some, look, I hear you 100%. Yes, you do. Absolutely. JT, Sergio and I beat ourselves to death on the Uni-Renko size, also on the higher range time, the range bar settings to create this green background. And we have come up with what I think is, you can see how great it works. That's why I didn't want to take this webinar off of JPEGs. Because on a JPEG, you can show anything and represent anything. And that's why I showed you multiple futures markets and multiple stocks. And if I hid the upper corner, you would not know if it was a future or a stock. And if I hid the upper corner and I told you it was a Forex market, you wouldn't know the difference. Trades exactly the same way. No, I don't mind, Didi. I totally get you, Didi, and I know where you're coming from. It's everybody's concern. Is can you avoid losers? Yeah, DD, no, this has nothing to do with Vantage Point, and I have really not evaluated them. This is the special offer. I know you, if you came in late, I'll show it to you. It's $9.99 for never pay us another dime. If you get free, if we upgrade the software, we send it to you. We send you the upgrades. If we add on the software, we will give you the add-ons for free. You will also get, we give you a 10-module educational training session. We give you 450 videos in our tutorial library. Sergio is going to configure this. Do not worry about setting it up. He will set the entire thing up. Rory will help if he needs. You come into my live trading room in the morning. I mean, I hope, although I'm not going to guarantee ever anything, but I mean, we're pretty good at making at least 1,000 a week after commissions, not before. And I'm ultra transparent. I mean, nobody drags this over and shows you they're weak, but me. I mean, you can't, you cannot fake. You just can't do it. So you know those numbers are real. I mean, and I'm not saying I'm turning $83 into 5 million. I'm being reasonable. And I'm a really good trader. And the first 10 get 6 months of my elite trading newsletter, which is all my options trades and all my micro cap biotechs heading into FDA approval for their phase 2 or phase 3 medicine. I hit a lot of home runs there. I mean, those things go up 300% and 400%. And you don't have a lot to lose because some of them are only worth 50 cents. You're only going to take, these are risky positions. You're looking for a 200 or 300% winner. You're going to keep them small, and you're going to get the market scanner, which is $1,000, which is what we charge on the website. Expires Sunday night, and that's the offer. I don't look at the VIX, Donna, for my options. You know what I do on the options? I'll just tell you really quickly. I look at the intrinsic volatility of the options itself. If the intrinsic volatility is high, I'll sell the option and take the, if they're overpriced, I'll sell them and take the premium. If the intrinsic volatility versus historical volatility is low, I'll buy them. So I just look at I look not at the overall VIX, but I look at the volatility of the individual instrument that I want to trade. I always make sure if I'm getting them cheap, I'll buy them, and if I have to pay a lot of money for them, I'll sell them and I'll take the premium. And it's really made a big difference in your performance, in my performance. When you take a loser, you lose less money. When you get a winner, you make more money. Let me look at gold. Gold is giving me a sell right now. And sure, right here. There it is. I'll show you the NQ. I just don't want to keep people here forever, but I will do it. That'll be the last chart I'm going to change to. See, it's setting up for a perfect sell. NQ is giving you the sell, pink background, red correlative, orange, orange. Now, if the market was moving, once this trend line, it would happen quickly. You broke the pivot. Once the trend line evolved below the 15, you're in. And you'd have a great chance for having this run. Except right now, the market's dead. But you can see how it's giving you a sell. And if this was in the morning, you'd be right in this trade. It might work anyway, who the heck knows? But it gives you the heads up. And you don't have to sit and watch the NQ forever. How much would you have taken long order at 914? I'm not sure which instrument pre. And I'm really just getting to the end here. I just want to finish up. What I'm gonna do, JT, is bring you all into a master class because a written step-by-step I've found is not as good as putting you all into a class. And what I do is I open chat so you can actually talk to me. GoToWebinar has a way of opening up the mic on everybody. So hopefully not everyone talks at the same time, but we're all gonna talk and I'm gonna go over everything with you ad nauseum. And then you're gonna get a video copy of that. It's much better than a manual. Trust me. This dynamic exchange, and it can last 2 or 3 hours, as long as you need to get an absolute understanding of every trade, every setup, and the people who attend are the only ones that are going to get a copy of that session. So you don't have to take notes, you don't have to write anything down. It's yours, and you can look back on it. It's $9.99. It's it, Mark. It's in the. Rory, is the link in the room? Mark, just look at the bottom. The link is in the room. Is in the room right at the bottom. Just call us, TJ, and we'll take care of you on that. Or send us an email to info@rightlinetraining.com. Okay? No, it's just configured differently, John. The market trader is configured different from the market analyzer, but we'll configure it for you. Don't worry about that. Hold on 1 second, Mark. Can you see the link at the bottom, Mark? In the chat window. Mark, Rory's going to put it in again for you. Hang on 1 second, Ed. 1 second. Mark, Vantage Point, this is, I don't even know where we're getting Vantage Point from here. This has nothing to do with Dr. Keith and nothing to do with Vantage Point. It has nothing to do with anything here. I just want you to understand that. That's all. But I mean, someone keeps bringing that up. And it's you, Ed. This is not Vantage Point or Dr. Keith. It's something completely different. Okay, whatever link you need, Mark, just send us. You can send us an email to info@rightlinetraining.com. We'll send you whatever you need. Okay. All right. Well, listen, that's it. No, my pleasure. That's it. I hope you'll come aboard. I want to help you make money. If you don't, I hope you'll learn some things about what software works and doesn't. And if the software is attached to price movement on your trading chart, it's not going to have any forward-looking ability. It's got to look at higher time frames or other markets. That's what creates its forward-looking ability. And I don't know any software packages that do that. They may be out there, I just don't know of them. But we unlink our analysis of our indicators with price on our trading chart, except for the gear on our trading chart, which we have to trade in the same direction as. If you come aboard, we're going to do a long master class, and you guys will be expert swing traders. I'm telling you, because we'll go. I'll just say quickly, what is really good about a dynamic class is I can show you an entry, and you can tell me whether you would take it or not, and give me all the reasons why you would take it or the reasons why you would stand aside. And then I can critique your assessment of the trade. You can't do that off a manual. And that makes it much, much, much more powerful. So listen, everyone, have a great weekend, a great day. And I hope to see you in the training room. Take care, guys. Bye-bye. Hey, thank you, George. Take care.